students, good evening. We are continuing the same topic of the bank reconciliation. We have already 2 lectures related to that. In the first lecture, we have discussed about the bank reconciliation statement, that what is the bank reconciliation statement, what is the purpose of the bank reconciliation statement. Then in the second topic, what we have discussed, that there are so many reasons that why the balance as per the bank statement and the balance as per the cash book, why they are different. So we have discussed the differences, and then we have discussed that how those differences are treated in the bank reconciliation statement, but we haven't done any calculation. So in the current topic or in the current section of lecture, what we will discuss the bank reconciliation statement, how it is prepared. So what is the format of the bank reconciliation statement, and if there is a debit or the credit, how it is adjusted. So if there is a plus or minus, how we have to calculate that one. So that part we will calculate in that one. So first of all, we are starting that we have 2 statements available. One is the bank statement that is issued by the bank, that is prepared by the bank, that is maintained by the bank. And the second statement or the information that we have is the cash book. And the cash book is prepared by the account holder, the accountant of the business. So there may be a possibility of the differences. So we may start from the statement which is issued by the bank, and we can reach where we have a cash book balance, or vice versa. Like we can start that how much is the balance is available as per the cash book, the bank balance available as the cash book, and then we can calculate the differences, and then we can match that amount with the amount that is as per the bank statement. So in the current equation, or in the current, you can say the example, we are starting that the bank balance as per the cash book is given, that the amount is how much, that is 13,000. But the bank balance as the bank statement, that is how much, 19,000. So it means normally what we see, that if there is any debit balance, if there is any credit balance, so the same transactions are recorded, the bank statement transactions are recorded, and at the same time the account holder is also recording. So the difference should not be there. But if there is a difference, so here as per the cash book, the balance in the bank is $13,000, and the amount as per the bank statement which is issued by the bank, which is received by the customer, so that is how much, that is 19,000. So now we have to find out that why the difference is there. So what we have to do, we have to match. We have to match all the items which are in the bank statement with the items which are in the cash book, and then if there is any difference, we have to point it out. So the first difference we have identified, that is the very first difference, is the uncredited checks. So uncredited checks are 6,000, mean the amount that is deposited in the bank, but still it is not credited, or what we say, not collected by the bank. Means the business has received check from the customers, they have deposited that checks into the bank account, but still bank has not credited that amount, bank has not still collected that amount. So we have discussed the reasons, you can refer back to the previous lectures. So it is how much, $6,000. So now what we have to do, we have to credit it. Credit means that we will write here there is a balance as per the cash book, that is the debit balance. Debit balance means what? That is the normal balance. Normal balance means it is a positive balance. It is not overdraft balance, it's not a negative balance, it's not a credit balance, it's a debit balance. Means as per the cash book in the bank, you have a $13,000 available for use. So it is a normal balance or the debit balance. So what rule says that if there is any uncredited check or uncollected check, because you have recorded it as the asset, you have increased your cash book. So what we have to do, we have to now decrease in the cash book, so it should be credited. So this is positive, this is credited, mean this is debit and this is credit. So what is the effect of this thing? So obviously what we have to do, we have to do it in the negative. So this will be considered as the minus. Why it is minus? Because it is debit, it is credit. So we will discuss that how it will be recorded in the next transaction. So 13,000 is the debit balance, 6,000 is the credit balance. Just for the calculation purposes, it is obviously not written in the proper format, just for the calculation. So 13 is debit plus, and this is credit minus 6,000. So the answer is how much? That is 7,000, and that will be debit balance. This amount we are not writing here, it is just for the explanation purposes. So only we will write the balance at the end. So the plus minus we will do completely at the end. Okay, now the next thing is what is the unpresented checks. Means the business has issued the checks to the suppliers, but still it is not presented in the bank for the collection. So when the business has issued the check to the supplier, they have credited the bank. So now what we have to do, we have to make a reversal and thing. So that will be debit. The amount is how much? 3,000. So any amount that the business has issued to the suppliers, but still they have not collected that money from the bank. We have already discussed the reason. So it is how much? It is 3,000. So the rule is, again in the previous lectures we have discussed the rules, either it should be debited or credited, so it should be debited. So now we have a balance of debit 7,000. This is also debit of 3,000. So it will be a debit of 10,000. Now the next thing, number 3, why it is plus? Because this the balance was debit, this is also debit, so debit plus debit, so it will be added. So these are both are debited, so it will be debit and debit will be added. Now the next thing is what? Direct deposit by the customer. Some of the customers, they are directly depositing the money into the bank account. The business will know this thing when they will get the bank statement. So this is also always debited. So because this money, you have to increase your bank balance or in the cash book. So you have not increased it, so it will be debited 5,000. So 5,000 is here debit, and 10,000 was also debit again. So it is a debit of how much? 15,000. Now the next one is number 4, direct payment by the bank. As per the standing order for the rental expense, or for the utility bills, or maybe for the insurance regular payments. So you have given the standard order to the bank. So the standing orders are given to the bank. So in that case, bank has paid money on your behalf. How much? 4,000. So bank has reduced the money. So again, you have to do it right and the credit. So this is debit 15,000 and this is credit 4,000. It means both are on the opposite side. So we have to minus. And obviously there is a debit of how much? 11,000. Number 5 is the bank charges. The bank charges may be, for example, it may be the ATM charges, the taxes are there, or there may be checkbook charges. So 1,000 charges are there. Obviously, bank is reducing the money. What is available in your bank account, when king is reducing is the money. So that's why you have to also reduce. It will be credited. So that was debit. This is credit. So again, what we have to do, we have to reduce. So it will be how much? It will be a debit of 10,000. Now the next one is the bank income. So because of the saving account or any other, so there is an interest income. So bank is crediting that amount into your account. So bank is increasing your account. Again, obviously, if the bank is increasing this amount in your account, so number 6, so again, what you have to do, you have to debit it. So that is debit. That is also debit. So it will be added. So it will be how much? It will be 12,000 as the debit balance. So debit plus both is debit. So it will be 10 plus 2, 12,000 debit. Okay, the next thing, that is the last one, we have find out the reason, that is why they are different. So there is an error. Error by whom? By the customer, or it may be by the account holder, or it may be by the bank. So here there is an error by the bank. So they have overstated. So you have, as a business, has deposited some money in the bank account, but they have overstated that money by how much? By $7,000. So it means what bank has done, so they have increased your account by how much? $7,000 extra. So you cannot correct it. Obviously, bank will correct it, but you can write it only in the bank reconciliation statement. So how you will write it? Because bank has credited, bank has increased the money. So what we have to do, we have also to increase that amount into the account. So it will be debit. So just very important thing that you have to remember, we are not writing this thing in the debit and credit form. Means this is not a journal entry. You are not correcting the financial statement, you are not correcting the cash book, you are not correcting the bank statement. This bank reconciliation statement is just for the matching the values, the value as per the bank statement and the value as per the cash book. It has nothing to do with the debit and credit in the form of the journal entries. It is not affecting the account. This debit and credit is just for the plus and minus to make the bank reconciliation. So this thing you have to remember in the mind. So 12,000 is there. So this is debit and this is also debit. So that 12 plus 7, so it will be 19,000. So if, for example, all these are the things that we have already calculated. So we started from 13,000 and the end means the bank balance as per the bank statement should be 19,000, because we have checked all the errors, we have checked any amounts which are still deposited and not credited, or there is some amount the checks are issued but still not presented in the bank, or direct deposits, direct expenses, bank charges, bank income. So all these things are recorded or reconciled. So we have got the balance of 19,000. And if you remember in the start, there was a balance in the bank account. The credit balance was how much? That was 19,000. So it means now both entries are matched. Obviously, these are not debit and credit in the form of the general entries. There is no effect in the accounts. It is just debit and credit for the plus and minus to understand the bank reconciliation. So here it is a debit thing, but we will not write it as a debit. Why? Because we are now writing the bank balance as per the bank statement, and in the bank you have a credit balance, because bank will always show it as a credit balance because it is a normal balance, or what we say the positive balance. It means bank is showing $19,000 in your account as a credit balance. So the same amount we have calculated here. So by adjusting almost 6 or 7 different things are there, so we have reconciled it. So we started with 13,000 and reached to the value 19,000, and when we checked it with the amount with the bank statement, so both are matching. So it means we have completed the bank reconciliation statement. So we have added or we have deducted. So this is maybe in the form of the plus or the minus. So in this way we have completed the bank reconciliation statement. So this is how we prepare the bank reconciliation statement. There is another possibility that we don't start with the bank balance as per the cash book. We can start the bank balance as per the bank statement. So here the bank balance as per the bank statement, that will be a credit balance, and again we will plus minus and we will reach the value of 13,000. So there is a possibility of starting from the cash book and reaching at the bank statement, or we can start from the bank statement and we can reach the value at the cash book. So both are correct. There is no issue in that, because we have both values available. The balance as per the cash book is also available. The balance as per the bank statement is available. So what we have to do, we have to reconcile it. We have to match it by just looking at these values, that what are the reasons of the differences, and then plus or the minus is done. One more thing that is possible here, there is a possibility that, for example, that we don't have a normal balance as per the cash book. There is a possibility that you don't have a balance 13,000 in your bank account, but you have a balance in your bank account, but that is the overdraft balance. So that balance will be what? That may be a credit balance. So in that case, what we have to do, we have to just write it here, and then the same process will be there. Only difference will be that, so here 13,000, this is also credit, that is 6,000. So it means here it will not be a debit one, it will not be a 7,000, it is 13 plus 6, it will be 19, and in the credit. So there is a possibility that you may have a credit balance or the negative balance. So we have to start from that, and again we will continue in the same way. Okay, now the next one that we discussed, that there's a possibility that the bank balance as per the cash book is not a debit balance, it is not a normal balance, it is a credit balance. Credit balance means what? That it is a overdraft balance is there. So that is what? That is the overdraft, or simply we can say the negative balance is there. Means in the bank account you don't have a 13,000. Either it is 13,000 in the debit side or it may be on the credit side. So here we have a balance that is a negative balance, means there's an overdraft balance, means you have to pay the money to the bank, the overdraft facility, as we have discussed in the earlier lectures. So for that purpose you can refer back to those lectures. So we have discussed the overdraft facility in the first topic of the bank reconciliation. Now we start with that there's a negative balance, there's a credit balance. Overdraft balance is there of how much? 13,000. Now the rules are same, the debit or the credited, so the same adjustments will be there, the same reconciliation plus minus will be there, only it is a credit and this is also credit. So credit and credit both will be added, and the amount will be how much? That will be 19,000 credit. Now this is credit, this is debit, so it will be 19, and this is debit 13, so it will be how much? 16,000 as a credit. Now this is debit, so this is credit, and this is debit. Again what we have to do, we have to minus it, so it will be 11,000 credit. So this is credit, this is also credit, so 11 plus 4, so it will be 15,000 credit. Now this is also credit, so 15 plus 1, so it will be 16,000 credit. So this is debit, so we have to minus it, so it will be 14,000 on the credit side. And the last one, this is credit and this is the debit. It means that is the 7,000 balance, and that will be what? That will be credit. So there's a balance of how much? 7,000 balance is there, and that will be, because it is as per the cash book, it is a credit balance, so it will be debit balance. So it means debit balance again means what? That is the overdraft balance. So bank is showing in the bank statement of how much? That is the 7,000 amount as a overdraft balance, but your account or what you are recording in your cash book, you are showing 13,000 overdraft, but actually there is only 7,000 overdraft as per the bank statement. Otherwise this credit or debit rules will be same, just we have to consider either it's a credit, so we have to plus, or if it is a debit and credit we have to minus. So in this way we can reach from the cash book to the bank statement, or if we start from the bank statement we can reach here in the cash book. So this is how we are preparing the bank reconciliation statement. I hope you have understood the concept. We have discussed the examples, we have discussed the concepts, we have discussed the reasons of the differences and how to reconcile it. But still, if you have any doubt, if you have any question, you can ask me in the comment section. Thank you very much.